You're listening to CFRN, the Christian Financial Radio Network.
Good afternoon, traders, and welcome back to the CFRN E-mini Futures Cast. This is the daily broadcast of Indeterminate Length, where we discuss all things E-mini, along with some really big ideas on the finer points of trading gold, bonds, crude, sugar, the euro. Joining us today, Mr. Michael Borg. From our trading desk in Chicago, Mr. Burton Schlichter. Now, to get things started, let's go to our host and founder in Studio A, overlooking South Mountain, America's largest city park. Here's Dwayne.
Good afternoon, welcome back. Today is Monday, 10th day of March, 2025. Thanks so much for joining us. Whoever you are, wherever you are, we're just glad to have you right here, right now. This is our second live broadcast of the day. We do two every trading day. Now, the first broadcast, that's private. That's our live training room. That's for members only and those who are taking their 1 week free trial. If you have not taken your 1 week free trial, when Michael joins us in a bit, he will walk you through step by step exactly how to take the trial a couple of times, just to make sure you get it. We'll get you indicators indicating today, and your trial will officially start tomorrow. And don't worry that tomorrow's Tuesday, you'll still get 5 consecutive trading days. Now, when the live training room ends each day at 11:30 a.m. Eastern, we take a 30-minute break, and we come back for this broadcast, the afternoon broadcast, which, unlike the morning broadcast, is open to the public. Everybody, everywhere on planet Earth with an internet-connected device. Now, there's 2 different ways to join this afternoon broadcast live. The best way, you only have to do it once. Go to mytradingiq.com. Scroll down to where it says Noon Broadcast. Click the link, fill out the 30-second registration form, and you're done. What will happen going forward is every trading day, you'll get an email about an hour before this broadcast starts. In that email, there's a link. So at 12 noon Eastern, all you got to do is click the link in the email, and it will automatically log you into our platform. Now, the benefit there is you have access to the question box, so you can ask questions and participate in the discussion. Of course, there'll be days you're out of the office, away from the desktop, but you still want to join live. And there'll be days when you're busy, you can't join live, but want to catch up later. You can do both of those via our YouTube channel, which is easy to remember. youtube.com/CFRN. Not only do we broadcast live every trading day on our YouTube channel, as we're doing right now, simulcasting, but we also archive each and every daily broadcast. Currently, there's over 2,700 daily episodes archived for your educational and viewing pleasure. And if you're new to the world of CFRN, it's a great way to get to know who we are, how we've evolved over the years. Thanks to the power of YouTube, you can scroll back 6 days, 6 weeks, 6 months, 6 years, even more. Obviously, you're not going to watch them all, nor do you need to, but just poke around. Check out some days in this year, and check out some days a couple years later. You get the idea. youtube.com/CFRN. Okay, we are back to our regularly scheduled programming. Michael was on his long overdue and well-deserved vacation last week, but he was back in the saddle this morning in the live training room, so about 50 minutes into the broadcast, he'll join us for a recap of everything that happened this morning in the live training room. And then we'll do some live trading on the TradingView platform for about 30 minutes. and then we'll wrap it all up with a good word for the day. So let's get into our daily devotional. Now, the topic that we're currently on, day 2 of 5, no regrets. Our scripture today is Matthew 7, verses 7 through 11, and I'm going to share with you from the Message translation. Don't bargain with God. Be direct. Ask for what you need. This isn't a cat and mouse hide and seek game we're in. If your child asks for bread, do you trick him with sawdust? If he asks for fish, do you scare him with a live snake on his plate? As bad as you are, you wouldn't think of such a thing. You're at least decent to your own children. So don't you think the God who conceived you in love will be even better? Again, that was Matthew 7, verses 7 through 11. The power of prayer. I spent nearly every night, all night long, in prayer, crying out in great desperation. I could not imagine leaving this world early. I could not imagine leaving my family behind. Persisting in prayer is confidently admitting to the Lord that you have no other alternative. And through your utter helplessness, He can and will move. Persisting in prayer allows you to get out of the way. Be prayerful. And in this, you will overcome the regrets of your life and move in greater wisdom and understanding as you submit everything to the Lord. Prayer protects your heart from sin. Prayer opens you up to the leading of the Holy Spirit. Prayer helps to guard you against making poor choices. Prayer helps you to be prepared for good work. There's great power in passionate prayers. Regrets mount when we use poor judgment or make ungodly decisions or connections. God gave us prayer with all its different facets as a beautiful means of communicating with Him so that we can grow in maturity and out of a life filled with regrets. E.M. Bounds once said, "And I have found it to be true that God is waiting to be put to the test by His people in prayer. He delights in being put to the test on His promises. It is His highest pleasure to answer prayer and to prove the reliability of His promises." Let's pray. Heavenly Father, thank you for your promise that when we ask, we receive. When we seek, we find. And when we knock, the door is opened. Help us to trust in your goodness and to come before you with faith and persistence. Provide for our needs according to your perfect will. And remind us that you are a loving Father who gives good gifts to your children. It's in Jesus' name we believe and pray. And everybody said, amen. Amen. And happy Monday. Markets don't look so happy, but hey, you can't let that rule your life. So let me give you the numbers and then we'll move on. Fair enough. All right. We'll start here in the U.S. with the cash markets or the indices, as we do each and every day. Currently, the Dow is down again, 471 points. That's a little over 1%. The NASDAQ down 623 points, 3.5%. S&P 500 down 122 points, almost 2.25%. And the Russell 2000, our man in the street, down 32 points, just over 1.5%. In the commodity basket, crude oil down 33 cents, trading 66.71 last. Gold down $1.90, trading 29.12.20 last. Silver down 16 cents, trading 32.65 last. In the Asian markets at the close, the Nikkei posted a gain of 141 points. The Shanghai dropped 6. The Hang Seng fell 447, almost 2%. And in the European markets at the close, FTSE down 70, almost 1%. The DAX down 380, basically 1.75%. And the CAC down 60. So we had a mixed day in Asia. In fact, the Nikkei is the only green on the screen at the moment. It was a red day for the UK. And yes, it is a big red Radio Monday here in the US of A. So, let's take a look at the news. Since those are the numbers and there's nothing we can do about it, we might as well move on, right? Yeah. Not that we can do anything about the news either, but we can see what they're trying to sell us today. Let's go up Canada way. Canadian lawmaker Mark Carney was selected by the country's Liberal Party to replace Prime Minister Justin Trudeau. Trudeau resigned roughly 2 months ago after losing support from his coalition government, likely avoiding a no-confidence vote. Trained as an economist and most recently as the country's international lead on climate finance. Yeah, you tell me what that is. Carney is widely credited with helping navigate the Great Recession as head of the Bank of Canada in 2008. Before entering public service, Carney spent 13 years at Goldman Sachs. He will quickly face an electoral test. General elections are scheduled for October, though some say he may call for snap elections shortly in an effort to shore up support. Carney takes over as Canada grapples with uncertainty around tariffs on its exports to the U.S. President Donald Trump leveled a broad 25% levy on imports from the country, but then granted an exemption applying to about 40% of Canadian goods until April 2nd. Now, obviously, they do politics a whole lot different than we do. You got a country without a leader for, what's it been now? 2 months? And I guess Justin got tired of being called the governor of Canada, so he just handed in his papers and left the country to fend for itself. But now we got somebody in the saddle until the regular elections or the snap elections. Yeah, I guess I should study up on Canadian politics although I never plan to live there, so I'm not going to be overly concerned about it. The death toll from violent clashes and attacks in Syria rose to more than 1,000 over the weekend, the worst bloodshed since former President Bashar al-Assad was ousted in December. Fighting began Thursday along the country's western coast between state security forces and Assad loyalists, with the majority of victims appearing to be civilians targeted in revenge killings. Assad, the last of a dynasty that exerted often ruthless rule over Syria, was part of the Alawite minority, an offshoot of Shia Islam. The group makes up roughly 10% of the country's population, but received long-running preferential treatment from the Assad regime. The new leadership is pledged to end retaliatory violence, though an independent watchdog estimates that at least 700 Alawite civilians have been killed in the current fighting. Assad himself remains alive, having fled in the final days before his government's collapse. He was granted political asylum by none other than Russia, where he is now living out his retirement, I guess you call it, in Moscow. Gene Hackman. What a great actor, and what a horrible and mysterious story. Authorities have now revealed new details about the deaths of both actor Gene Hackman, 95, and his wife Betsy Arakawa, 64, whose bodies were discovered February 26th in their home in Santa Fe, New Mexico. Arakawa died of hantavirus pulmonary syndrome. This is a rare respiratory illness with flu-like symptoms contracted through exposure to rodent waste, which makes me wonder if perhaps one of the two or both might have been, I don't like to use the word hoarders, but I just did. You know, people who accumulate a lot of stuff. You've probably seen the TV show, and I'm not saying that's the case. I'm just curious how she came in contact with this rodent waste, because they lived in a very beautiful home and a very beautiful community. Investigators found evidence of rodent activity on the property, but have not determined how she was exposed. Her last known activities were February 11th, when she visited stores in Santa Fe before returning home. Hackman died about a week later due to heart disease, with Alzheimer's as a contributing factor. His pacemaker recorded its final activity February 17th, and investigators found no indication that he tried to contact anyone after Arakawa died. He had no food in his stomach but was not dehydrated. Authorities found no signs of foul play. A deceased dog, which was found in a crate and may have been recovering from a recent medical procedure, was also discovered in the home. Autopsy results are pending. Man, our hearts and prayers go out to the families of these folks. You would think in today's environment, with so many ways of monitoring people, and you just never know. I guess we should just be thankful for every day that we're given. May they both rest in peace. Well, no surprise, stock blew off all they can talk of trading as investors processed growing concerns about the health of the U.S. economy and readied for a busy week of economic data, headlined by a report on inflation, amid concerns over its resurgence under President Trump's unpredictable trade policy. I don't know why it's unpredictable. He's been pretty transparent, but I'll let somebody else argue that. The Magnificent Seven led the sell-off. The month of March's markets struggles continue to be fueled by worries over the health of the U.S. economy. Those concerns have become wrapped up in Trump's ongoing trade salvo as tariff negotiations between the U.S., Mexico, and Canada dominate the headlines. In a Sunday interview on Fox News, Trump addressed concerns about a potential recession, describing the economy as undergoing a period of transition. Now, Basan has said he doesn't think there'll be a recession. And all last year, I yammered on and on about I thought we were headed for a Great Depression. But then, lo and behold, Trump got elected, and I thought, well, I mean, when you've been screwing things up for 4 years, you can't just turn it on a dime. So, I guess the jury's still out. We'll see. I mean, we're, just over a month into this presidency. So, a lot of cleanup work has to be done before you can start to put the house in order. Now, we're also facing a government shutdown this week, or this weekend. The odds, 1 in 3. Even Trump says, you never know. A mystifying recent ritual of American politics is set to commence again this week as lawmakers play chicken with a government shutdown that could begin Friday night if gridlock wins out. It's perhaps even more bewildering for markets and pretty much everyone else given the Republicans' unified control of government at the moment. But nevertheless, the odds appear to be rising. Doug Eakin, president of the American Action Forum, said, I put the probability at something like 35%. If you'd gone back a month, I'd put it at 0. Panacea Policy's Terry Haynes offered 30% odds in a note to clients over the weekend. And Henrietta Trey's of Veda Partners only came in slightly lower with a 25% tally. And RSM economist Joseph Bruselas noted that economic impacts are already evident, with a kink developing in the U.S. money market curve between different Treasury bill rates, likely due to shutdown concerns. Even President Donald Trump appeared resigned to the possibility. Again, he said yesterday, it could happen. You never know. I think that's his way of, I don't know, calling a bluff. We'll see. This time it's usually the Republicans' fault, right? This time, if the government shuts down, it will be the Democrats' fault. So, we'll see. Hang on one second. Okay, let's carry on with this cheery episode. New York Fed, what do they got to say? According to Reuters, Americans grew more worried about the economic outlook in February, even as their expectations of the future path of inflation were little changed. According to the bank's latest survey of consumer expectations, inflation a year from now is seen at 3.1%, up a hair from January's 3% reading, while the projected level of inflation 3 and 5 years from now was unchanged relative to January at 3%. And of course, we know the Fed, they want inflation at 2%. The bank's relatively calm outlook for inflation contrasted, however, with expectations of accelerating price increases for food, rent, gasoline, college, and medical costs, as well as a year ahead expected rise in home prices of 3.3%. Uncertainty over the inflation outlook also rose. The bank's data contrasts to a degree with other recent reports showing notable gains in expectations for future price rises. Bloomberg says a chorus of Wall Street strategists is warning about rising volatility in the stock market. And boy, has it been volatile, with Morgan Stanley's Michael Wilson the latest to sound the alarm on slumping economic growth amid President Donald Trump's trade wars. And last, Bloomberg. Rocket is pushing deeper into the property market with a deal to buy Redfin Corp that values the real estate listing site at $1.75 billion. The Detroit-based financial technology group will pay $12.50 for every Redfin share in an all-stock transaction, according to a statement Monday that confirmed an earlier Bloomberg report. Price represents a premium of 63% over the volume-weighted average price of Redfin's common stock for the 30 days leading up to Friday. Well, on a down day, you got some shareholders out there jumping up and down. And I guess there's one more here from Reuters. Americans grew more worried about the economic outlook in February, even as their expectations of the future path of inflation were little changed. According to the bank's latest survey of consumer expectations, inflation a year from now again seen at 3.1%, up a hair from January's 3% reading, while the projected level of inflation 3 and 5 years from now was unchanged relative to January at 3%. And again, we know the Fed wants 2%. Okay. Now, let me take care of something that I failed to take care of. It's been a little bit of a crazy day. But stand by, and I'll get this fixed if I can. See, did that do the trick? Nope. Hang on. We'll get there. How's that? Hey, it worked. Okay. All right, Logic 247. As most of you know, that's our 24/7 Emini alert service. Logic 247. Now, it's not just E-minis, it's also crude, gold, and silver. We're in week 345, and over the last 345 weeks, we've issued over 19,000 individual handcrafted alerts. That's a lot of alerts. It staggers me sometimes because every day I just rattle it off, but when I stop and think about it, 19,000 times I stood here and looked at the chart, tippy-tapped on my keyboard, hit send. I think we're over 19,100. I don't know, somewhere in that area. Well, it's quite a lot. Anyway, today's what's important, right? Since the markets opened last night at 6 p.m. Eastern, I issued a total of 9 alerts. At the time Valerie did the recap, oh, wait a minute, I thought she did one this morning. Hang on. Maybe nothing changed since last night. Let me just look real quick. We'll pull that back down for a moment. And yes, Monday, 6:30 a.m. Okay. Thought I got it right. Then I got it wrong. I'm sure that never happened to you. And for that, I'm glad. All right. Is that right? Okay. I think that's right. Okay. The recap was done this morning at 6:30 a.m. Eastern. This was the recap done last night at 10 p.m. So last night at 10 p.m. we had 9 alerts, 5 actionable. This morning we had 9 alerts, 5 actionable. No, 8 actionable. I'm sorry. And so far nothing's been stopped out. So that's a pretty good way to start the week, I guess. And we're only waiting on one, so when I go to put out some more, that'll make it simple for me. It gets confusing when there's one strung out through the week, different markets, some long, some short. The more you see on the waiting line, which means it hasn't triggered yet, the more confusing it gets for me. But I'm not complaining. So, since the markets opened last night at 6 p.m. Eastern, and that time change, you would think, okay, Arizona doesn't do daylight savings time, so we don't have to set our clocks forward, we don't have to set our clocks back, so we don't even have to think about it, right? Wrong, because the rest of the world does. So we got to compensate for what the rest of the world does. As you know, I always run my charts on East Coast time because, well, that's where Wall Street is. Now, I know Chicago is in Central time, but we've always done it on the East Coast. Michael's always been on the East Coast, so I've just always been on the East Coast. So now the market open for me is 6:30 a.m. Eastern. I just had my little 4-month vacation where markets didn't open until 7:30 my time, 7:30 a.m. But now they open. I'm on the West Coast. Just I know Arizona's not on the ocean, but we're on West Coast time, Pacific time. Okay. So for last 4 months, it's been 2 hours from me to the East Coast. Now for the next 8 months, it's 3 hours from me to the East Coast. So in the mornings, for those of you on the East Coast who've already had your 2 cups of coffee and you're raring to go at 9:30 when the bell rings on Wall Street, if I sound a little sleepy or sluggish, now you know why. Prior to trading, I think the only time I ever got up that early was to go fishing. I don't know. Anyway. All right, so this is where we are. So far, nothing stopped out, and just one waiting. Now, the purpose of the logic alerts is to help you learn how to read the chart. You want to be able to look at any chart of any market in any time frame, and with the help of our humble indicators, instinctively know what the next high probability move is. Now, what we have proven over 345 weeks and over 19,000 alerts is that 20% of the time, the market does not do the next high probability thing. It does something completely out of the blue that you did not expect. I repeat that every day because I don't want you wasting your time and treasure chasing 100% perfection. It doesn't exist. It can't exist. There's too many moving parts, too many market participants, from retails to institutions. There's just so many moving pieces. You never know. I told you the indigestion story last week, and the guy had to go to the street corner to get some Tums. So anyway, I won't go through that again. You can, of course, you can trade the alerts, and if you did, you're very happy today. But let that be the gravy. The meat on the bone is teaching you how to read a chart. Use the logic alerts properly. Pretty soon, you won't need my alerts because you'll see exactly what I see. We're about as transparent as you can possibly be on that, on everything. Now, the logic alerts each have an entry price, an initial target, often additional targets, and then a final trade to target. And they can come out anytime around the clock. Futures trade around the clock. We have traders around the globe. Our day session is their night session, and vice versa. So a logic alert could come out at 2 a.m. or 2 p.m. There's only 1 hour per day from 5 p.m. to 6 p.m. Like right now, we're in the Monday session, but it started Sunday night at 6 p.m. Eastern. The Monday session will end at 5 p.m. Eastern today. The Tuesday session will begin tonight. The Tuesday session will begin tonight, Monday night, at 6 p.m. Eastern. Okay? So, while logic alerts can come out anytime around the clock, our original alert service, the concierge trade alerts, that's not the case. The CTAs are posted as a static report shortly after the Globex Open on Sunday night, but last week I managed to get them out 5 minutes before the open, 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 with the exception of last Sunday. Okay, so know that my goal is to get them out every day 5 minutes prior to the Globex Open, and I always put a note in the discussion group and the trial discussion group. CTAs are scheduled for release at 5:55 p.m. Eastern, or I put a post that says CTAs will not be released prior to the open, so that you're not sitting there waiting for something that's not coming. Okay, so what that means is every one of our members, every one of our trial members had every one of these targets last night 10 minutes after the open. So when we go to the 30-minute chart where all the alerts are created, just keep in mind it was 10 minutes into the first 30-minute candle that these came out. The S&P, the Dow, the Russell, crude, NQ, gold, and silver. Now the weekly trading zones normally come out Monday night, Sunday night. How about Monday morning? That work? Unless Monday's a holiday. But the computer I use to do the weekly trading zones on, I had some issues, still having some issues, but my plan is to release the weekly trading zones tomorrow morning. I think, I could be wrong, But with the exception of Monday holidays, it will be the first time in over 15 years that the weekly trading zones did not come out Monday morning at 6:15 a.m. Eastern, except when Monday's a holiday. Then they always come out Tuesday at 6:15 a.m. Eastern. Now, once the weekly trading zones are published, they're carved in stone for the entire week. They don't change in any way whatsoever. So again, everybody had the S&P, the Dow, Russell, crude, NQ, gold, and silver 10 minutes after the open. So let's go look at this carnage on the daily chart. Whoa. Now, we talked about last week many times that we should get an incredible bounce off of the 50% fib. Well, we spiked it pretty good too. Okay. In fact, we had the 50% fib retracement on the daily and a bullish cross. That should have given us a whale of a bounce. But from 56.98, let's just call that 5,700, we closed 71 points higher. Almost one tick away from 72. So that's a 72 point bounce. Now that's just from here. It would be even more if you went from the low of the day. But I'm telling you what, this is starting to look pretty tough. And it's always darkest before the dawn, and the world's not coming to an end. We may see the 62. I can't remember the last time we had a 62% fib retracement on the daily. I can't remember the last time we had a 50. So, and I still haven't put back in the fib extensions. And the way the market has been behaving, I don't know. And look at the black step line. See how it's just, instead of running parallel with red and falling, it's been threatening to cross for days. I mean, the market really wants to turn around, okay? Where's this low at? Right here, okay? So we got nothing else to act really as major support until this area right here, where the step line crossed red and falling and turned it into blue and climbing. So you might pencil that in, 5607. 5607, and then below that's the 62% fib retracement at 5585. Not a prediction, just an observation. That's how markets work. We got this double top up here. I mean, it looked like we were headed to put in a new all-time historic high. This is the all-time historic high. And then we didn't. And then it looked like we were going to do it again, and we didn't. And then we got the bearish cross. That's when the red line gets below the green line. And you can see where we are now. Okay. Now, this is kind of like getting the pipes in your house flushed out. Your water, it's not flowing like it always did. A lot of crud and corrosion in those pipes. Blow them out. Same with your air conditioning ducts. Blow them out and oh my goodness, feels like you got a new air conditioner. That's kind of what's happening here. Okay. Now, Trump says recession, maybe, maybe not. All last year, I said depression till President Trump got elected. So, I don't know. I pray that I don't end up in the end being right. Most times, most people want to be right. It's just human nature. I desperately want to be wrong on that call. So, I guess we'll see what happens. Now, daily charts are important because institutional traders look at daily, weekly, and monthly charts the way you and I look at 30-minute charts, 5-minute charts, tick charts, and range charts. It has everything to do with account size. They're the deep pockets that move price. So I recommend you spend 2 minutes with the daily chart of whatever you're about to trade, just 2 minutes each morning before you start trading. see what the deep pockets are doing, and do what I just did. Identify the next area of major, in this case, potential support. See, you can't see that on a smaller time frame, but you can see it clear as day. What did I say that was? 5607/5608. Somebody should write that down. I'll write it down. Okay. You see, these institutions, they can handle a drawdown a lot deeper than you or I. They can also stay with a profitable position a whole lot longer than you or I would be comfortable with. Or have account size with enough margin to stay viable. So have a look and then go do your job on your chosen time frame for executing trades. Just see what the deep pockets are doing. Okay? And right now, there's not a whole lot of buying going on. But just think about this. For every transaction, there has to be a seller and a buyer. Huh. Right? All right. As I said, all alerts are created on a 30-minute chart. Now, these are last week's zones. Why? Because the new zones don't come out till Monday morning, typically at 6:15 a.m. Eastern. This week, because of the computer problems, they're not going to come out till tomorrow morning. But once they come out, they're carved in stone. Anyway, even on a normal week, on Monday, you always see the previous week zones. Now, once the new zones come out, everything will be based on the new zones. Okay? So, this was Friday. I drew in a couple of like 10 points. It's hard to believe that's 10 points, but that's 10 points in those windows. And I talked you through some of it. And man, did you have some beautiful opportunities. Okay. Now, these were 10-point windows. 57.69 up to 57.79. See that one? That right there is a 10-point window. You only need 2 points to get your goal for the day. So anyway, this is where we opened last night below the BBC, so we expect lower prices. And we dropped almost to the short target. It was 10 minutes into the life of this candle that the targets were posted. Okay, there was never any reason to be concerned about the long target because we never pulled away from the BBC. The low of that candle is 57.10 and a half. So we got close, but we didn't quite get there. Buyer stepped in, drove us back up to the BBC. The green line's called the BBC, stands for bull bear cross. Price crosses below the green line, we're bearish. Price crosses above the green line, we're bullish. No matter what time frame you're on. Fractal in nature. So support sends us looking for resistance, which we found at the BBC. The pullback holds more often than not. You can see it here, you can see it here, you can see it here. You can actually see it when it pulls back the other way. Okay. The pullback holds more often than not, but eventually it will trade through. So we consolidated for hours, and then we dropped to the short target. And then we continued lower all the way down to last week's weekly trading zone. Now that is the lowest weekly zone from last week. No? Hang on. Yes, it is. 5640/41. So here we are a week later, and last week's zone still in play, acting as support. When price rallies up to a zone, we expect resistance. When it drops to a zone, we expect support. Pretty as a picture. The Dow. We also drew this window in on Friday's broadcast. We filled it. We filled it. We filled it. And we almost filled it. This was the gap lower open last night. No, that doesn't seem right. Here, let's see what happens. Change this, change this. Aha, that's the problem right there. Okay. So we had a gap lower open last night. This was the closing candle right up here on Friday. Behind that, the vertical line separates today, Monday. Here's Friday. Here's Thursday. Okay. So we gap lower on the open. We have not filled the gap. That's unusual for futures. We came right down to the short target, pretty much to the tick. See right there where the step line crossed red and falling, turned it to blue and climbing. Boom. Support sends the market to resistance. Resistance sends the market back to support. We actually got below the short target a bit. Buyers came in, drove us back up to the VBC where we ran into more resistance. And the next major resistance you should be looking for is around 42,200. Okay, that's a low from Friday. First, you got to take out the current low, then you got to take out this low, and then your next major supports right there. On the Russell, okay. Oh, the time change, the time change. Yep. Okay, gap lower open, hasn't been filled. 10 minutes into the life of this candle, targets came out, and we dropped to the short target, bounced up to the zone, which we expect to be resistance till proven otherwise, dropped again to the short target, and this time this low right here is just above that low. Hopeful buyers came in, pushed us up to the BBC, but could never break away from it, and so then we fell back to the short target. Second time, bounced us back up to the BBC, back down to the short target a third time, back up to the BBC and the zone, but it couldn't stick. That was a 9:30 opening candle. So we ultimately traded just above this low from Friday, back to the BBC. Do you see how the pullback held, and it held, and it held, and it held? That's after it held. Okay. Trust me, the pullback does hold more often than it doesn't. But eventually, it's going to trade through. So, could you trade 2039 to 2037? You could, if you wanted to. On the NQ, once again, time change. Okay, opening candle last night, gap lower open, hasn't been filled. Again, unusual. We consolidated along the BBC. Blue and climbing turned to red and falling. And where did we go? Right down to the target. Consolidated a little bit and then continued down to the zone that was published a week ago today. Okay? 19064/065. Which was the lowest weekly zone from last week. Okay, and now we're just consolidating. When price encounters a weekly zone, 70% of the time you get consolidation, 20% of the time rejection, 10% of the time the slice. That's when a 30-minute candle slices through a zone like it's not even there. Okay, when that happens and it runs out of steam, it will typically retrace back to the zone it sliced through and then continue in the direction of the slice. Okay, gold. Here's the open. I'm sorry, crude. And we dropped right to the short target. Bounced up to the BBC and the weekly zone, the lowest weekly zone from last week. Back to the short target. And then we climbed right up just shy of this area. I'm surprised we didn't make that. And then we dropped, got below the VBC, and now we're consolidating again at the short target. We still have two markets left, gold and silver. We'll visit with those in a bit. Right now, Michael's going to give us a recap of what happened this morning in the live training room. Then we'll do some live trading on the TradingView platform. Then I'll be back to finish things up. But we've missed him very much. Let's give him a warm round of applause. Welcome home, Michael. Good to have you back. And this would be the point when you say, "Oh, that's very kind, Dwayne. Thank you for saying
And
that."
I've actually been saying stuff like that. It's just so good to be back. Thank you, Dwayne. It's so kind of you to say that. And it's good to be back in the saddle. Always forgetting to turn on the microphone and all that stuff that I always did. Still doing.
I got you. Anyway, charts look good. Oh, your screen looks good.
Okay, here we go. We'll roll with that then. Right, so just looking at all these things down here, there's a lot of negativity in the market today, it looks like. Anyway.
Yeah. There's not only blood in the streets, it's starting to creep up over the door jamb. So
Is it really?
I mean, it's bad out there. Yeah. Real bad.
Well, that is unfortunate.
When you're done for the day, I'll show you my daily chart. It'll just blow your mind.
Okay.
When you're
cool.
all finished.
All right. Let me get started then. Let me get started with getting finished. Good afternoon, everyone. Today is Monday, the 10th day of March, 2025. All right, so if you have not taken a free trial with us and you want to, go here to mytradingiq.com, click on the purple button right here. There's no credit card required for the trial. When you click on that purple button, if I click on this, it should bring me to the right page. It did. Okay, it's going to bring you to this page. Where all we have is your name, your email, and your phone number. There's 5 multiple choice questions down here. If you have a NinjaTrader, give us your machine ID. Now, that's going to get you some charts, but it's not going to get you the charts that we use in the room in the morning. All right. If you're not going to use the Ninja charts, and we don't need your machine ID. If you're just going to trade on Ninja, that's great. Trade on Ninja. I hear they have a decent platform to trade on. We do need to get your TradingView login ID though. If you're going to take the free trial, you want to get TradingView. Right? If you don't have TradingView, it's a really simple process to get it, and they do offer a free trial, I believe, for 30 days. To get it, all you need to do is go here to mytradingiq.com, click on Trading Platforms. Scroll down to right here. Not there. Right here, TradingView Platform. Watch this 3-minute video. And click on this link right here. When you click that, it's going to bring you to, well, let me just click on it and see what page it does actually bring you to. Let me close that one. Let's see, because sometimes they have sales going on. So it's going to bring you to this page. Now on this page, you're going to want to make sure you're on non-professional and monthly. All right, the difference is pretty significant. Actually, it's not that bad, I guess. It's not that big of a difference. But go to non-professional and monthly. And it's only $14.95 a month. Well, I guess that's quite a bit different than $99.95 a month. But just do that, okay? And the essential is good for if you're just starting out. You only want to have a couple of charts, a couple of alerts going off, a couple of indicators per chart. That's fine. If you want to move up and get more charts going at the same time, you can get the plus. You don't really need to go to the premium. The essential of the plus will do just fine for most people. So make sure you click monthly and then choose that. All right. If you go annual, it's cheaper, and every now and then they have a really big sale on the annual. So I go monthly until they have a really big sale, and then go to the annual and you get like 50 to 70% off, depending on what you want to do. That's how you get TradingView. All right. Now, once you do get TradingView, you're going to have some kind of a thing up here in the upper right-hand corner. You see how this one up here is? It's just a little picture that I have. But for you, it might be the first initial of your last name or the first initial of your ID. When you click on that, it says TV Trades Premium. That's what I have. TV Trades. That's my ID. It'll either be TV Trades or CFRN for me. Right now, I'm logged into TV Trades apparently. So that's what it's going to be for me. For you, it's going to be, I need whatever information you have right there. That's what you need to send to us. Whatever information you have right there. Okay. All right. So spreadsheet now. I did have to update the spreadsheet today. because we have a new month. And this, I know you went a whole week last week into this month, but I didn't do any of last week into this month. Not in the room anyway. We did have a rough start to the day today. I don't really think it was me being rusty. I did make one mistake right away, but the other two that I stopped out on were valid stop outs. So I started out minus 25 on the Russell, minus 10 on the ES, and then minus another 25 on the Russell. So minus 50 on the Russell, minus 10 on the ES is how I started out the session. We ended up getting, well, pretty much all of that back. Did we ever get positive on the ES? Yes, we did. At one point, we got to plus 6 on the ES. Anyway, this is the way it worked out. We ended up with 271 ticks on the NQ, 11 on the Russell, 54 on gold, and minus 32 on the ES. Put us at 1550 per contract on the morning session. Took 13 minutes and 8 trades this morning to get to $2,200. That's with 10 contracts on, and took a total of 42 trades. So at that point, we were negative on the Russell. We were minus 50 on the Russell, but we're plus 6. Are we plus 6 on the ES? I don't know exactly how it all came together. We might have been plus 12 on gold, plus 79 on the NQ. I think something like that. I don't know how it all came together, but we ended up with $2,200 with 10 contracts on. By the end of the session, we ended up with $1,550 with 1 contract. And since we're only 1 business day into the month for me, that puts us at $1,550 average. So down here, I corrected all this stuff during the break. On the year now, I've traded 37 business days, and we're averaging $1,595 per contract per business day on the year. Quitting when you get the goal for the day so far this year, this number hasn't updated. Let me update this number. This should be equals that number right there, I think. Okay, there.
I typed in an answer to Dan's question, but when you're done with this, you might want to take a run at it.
Oh, okay. I don't even have the question box open. So let me go and see what that is. Dan, there you are. Okay, I will, when I'm done with all this stuff, I'll get into that, Dan. Okay. So is that right? That should be times 3, I think, right? That is that number. Hang on. Let me see what that number is up here. 5350. Okay, it's that number divided by 10. That's what it is. Okay, so it should be this number divided by 10. Yeah, divided by 10 equals this divided by 10. 660. Okay. I don't know if that's right. It's pretty close to right, I think. But the 6.36 hours is correct. So quitting when you get the goal for the day, that means quitting when this number right here gets to be 100. All right, if you quit when you get the goal for the day and you had 1 contract per month, so far this year, you would have been you would have only had to work 6.36 hours, and you'd be up $9,780 total. All right, you'd be averaging $1,536 per hour in that time frame. Okay, that, I believe all those numbers are correct. I'll go check them again later to make sure. Now, that's where we stand on the day, on the month, on the year. So let me go here for a second. Let me just look at your question, Dan. How to get into a trade once signal files if the open is different than the close, for example, still doesn't close 56.97 is already in profit by 3 points. Do you wait for it to come back? No, I don't actually. I see what you mean. You're talking about something like this where the close was there and the open was down here, or the close was here and the open was up there. That's why I say to buy the open or sell the open. Buy or sell the open, not the close, Dan. Okay, I mean, you could do what we used to do, when we were trading, like let's say for instance, you're trading with the trend. Okay, now were you there this morning when I was talking about trading with the trend with the YDR and all that? So let's say for instance, you're trading with the trend, and this bar right here on a down close is going to be, well, you have a good idea on a down close, it's going to pull it out of the overbought and it's going to be a trade. In that case, you could sell 1 tick below the close of the bar ahead of time, because these are range bars, so you know ahead of time where the bar is going to close, right? You could do that. Or you can just wait till the next bar opens, because usually it's going to go back in the direction that you wanted, go back and give you a better entry. So you can just wait until the open happens and then get a better entry sometimes. That's what I do most of the time. Okay, I don't wait. I don't put a buy stop limit or sell stop limit order on like I used to do anymore. I wait for the close to happen, and then I get in, usually at a better point in the following bar. Okay, you're not selling the close, you're buying the open. You see what I mean? All right, so let's get into the trades that we did too. Okay, does that make sense to you, Dan? All right, this is the gold. No, okay. Well, I'll get into it in just a few minutes. Let me go over these trades and I'll get into it with you, okay? All right, so our first trade here on gold was a plus 12. Then the next trade was a plus 11. They got us to 23. Then the next trade was a plus 10. They got us to 33. And then we stopped out down to 23. Break even. We went from 23 up to 33 again. 12, 23, 33 down to 23, then 23 up to 26, I'm sorry. 23 up to 26, and 26 up to 36, and 36 to 37, then we stopped out down to 27, then went from 27 to 49, then 49 to 54, and that's where we stopped the trading this morning. So this is what I thought it was going to do this morning. I drew this in for you this morning on this trade right here. I think I only got a couple of ticks on that, 5. I said I thought it was going to do this. Remember me saying that this morning? I drew this in here this morning. That's exactly what it did. It went up exactly that much. I took one more trade right there, it looks like. Got a break even on it, and that was it. Now, during the break, there were a lot of nice trades here during the break. And look at this right here. I take the slingshot off, right? And you're below the YBR right now, so you're only interested in trades, the aggressive trend trades, we'll say. You're going to sell when price gets into the overbought, right? The aggressive trend trade, you're going to sell when price gets into the overbought. Okay, so as soon as price gets up here into the overbought, right here on this bar, that bar closed up. Well, the bar actually was a down close. This is a good example really to start with, but you're going to sell the open. You're going to sell after that bar closes, you're going to sell. All right, so you'd be selling the open of this bar. You wouldn't be selling the close of that bar, you'd be selling the open of that bar. All right, and that worked out fine. But on this one right here, where this was the up close that got you into the overbought, so you'd be selling the open of that bar. Not selling the close of that bar, selling the open of that bar. Okay, so when that bar opens, you see it went, this is a 7 range, it went 3 ticks in the direction, it kept going 3 ticks in the direction, giving you a better entry, up to 3 ticks better entry than the open of the bar right there before it went down. So you could have waited and put an order on there and let it go up and then come back down and fill you on the way back down. You could have put a limit order there and done that. But the better thing to do, and what I usually do, is wait till the opens there and then see if you can get a better entry. And if you can, then let me show you what I do. Okay. If you can, just have your finger on the trigger in the red like this. Okay, now the way I have my DOM set up is when I have my finger on the trigger in the red like this, all I have to do is click it and it's going to put me in right there. The best ask, right there. It's going to put me in right there if I click it. Okay, it's not a market order, it's a limit order that goes in right there. And it usually fills me right at that point. Sometimes it'll spread it over 1 or 2. But that's how I get into the trades. Right, now your question was, your question or statement, really, it wasn't really a question. They did have a question on the top one. How do you get into the trade after signal fires? I just showed you that. The other statement that you had was, by the time the signal triggers and you go to buy, sell the market, it's already moved. Well, yes, it's already moved, but a lot of times it moves in favor of your trade, not in favor of the profit, but it moves to give you a better entry position. Most of the time, it'll do that. I would say, well, most of the time, I would say probably 6 out of 10 times it'll do that. That is most of the time. 6 out of 10 times it'll do that. Not everyone's going to close and just keep going. You know, a lot of times, most of the time, it's going to close and it's going to go a little bit further because the momentum at that point right there, the momentum is dying, but it's still there. And so it goes a little bit more into it and then gives you the push down. Okay. And that happens, I mean, that happens a lot. But sometimes it doesn't. That's true. Sometimes it doesn't. And if it doesn't, you either miss the trade because it went too far into profit already. So you just skip the whole thing and you come back to the next trade. Or you get in, you try to get in right there at the entry, at the open. And if you can get in there, you can. If you can't, you know, if it's gone to the point where you would have moved your stop to break even, then cancel the trade. I had to do that several times this morning. Okay. I'll put some trades on here in the next few minutes, and hopefully I'll be able to put some trades on here in the next few minutes, and I'll show you. Okay. Now the Russell. Let's get into the Russell. The Russell had my number really early on. Let's get to the beginning of it. I came back, but where are all the stop outs? You know what? I switched. Okay, they are right here. Okay. My first trade here was the stop out, minus 25. My next trade was another stop out, minus 25 again. So we're at minus 50 at that point. Then we started to come back. We had 10 there that got us to minus 40. We had 20 there that got us to minus 20. We had 10 there that got us to minus 10. Then we had a plus 15 there that got us to plus 5. Then we had a plus 5 there that got us to plus 10. And somewhere I had a plus, I think it was somewhere in here, I had a plus 1. And that got us to plus 11 overall on the Russell. During the break, what the heck, man? Where is it? 261.49. That must be downstairs. Anyway, during the break, if you were trading with the trend, and if you were being aggressive trading with the trend, then every one of these red ones here is what you would have traded, right? Every one of those red ones is what you would have traded. If you're being conservative with the trend, in most cases, it would be the close of every one of those red ones that you would have traded, right? In most cases, not in every case. But let's see, being aggressive with the trend, you would have traded right here as well. That would have been a break-even trade. You would have traded right here. This right here would have been a conservative trade right there. And right here would have been your conservative trade as well. You would have had a trade right here because when you're trading with the trend, you don't have the slingshot on there, right? So you're not looking for separation. So you're not looking for separation anymore. You're just looking for the blue to get into the overbought. If you're below the YBR, you're looking for the blue to get into the overbought and you're selling. If you're above the YBR, you're looking for the blue to get into the oversold and you're buying. Right back below the YBR, you're looking for the blue to get into the overbought and you're selling. Like right here, you'd be selling. So right now, this is the Russell. Let me bring up a Russell, Dom. Now this one's already gone some into profit, but right here, I'm just gonna click right here, okay? And see, it just filled me right there. Now this is a valid trade right here. I don't think it's gone 10 ticks into profit. The entry point should have been 35.3. I'm in at 35.1. My stop is 25 ticks away. Now I don't think it went 10 ticks into profit, did it? So it's got to get down from here. It's got to get down to 34.1. And I'll bump the stop to break even. But that's all I do to enter the trade. What you just saw right there is what I do to enter the trade. Okay, now I don't have the best entry on this, but I think there it is. I'm going to bump my stop to break even, and now I'm going to take just a couple of ticks profit because I kind of screwed up the entry by a couple of ticks. And it should get down to here, right down to here at 30.9. Where is my target? Where is my target? The low of the day is right there, and my target's at 30.6. So I could let this thing run out, or I could start trailing in some profit. Looks like it's going to take me out with 2. All right, but what it should do is get down to the swing low right here. Now, did you see how I did that, Dan? That was the whole thing from start to finish right there. Now the entry point should have been right here, a couple ticks better than what I got, but it hadn't gone 10 ticks into profit, so I was still able to get into the trade and take a couple of ticks in profit. Now I know that that's just a couple of ticks and it's only $10 per contract, but it's $100, you know, overall that I just got there with 10 contracts on. So now what price should do is get down below this level right here. Now, if you were to look at this on a larger time frame, picture it on a larger time frame. Like combine, think of this not on a 19 range, but on say a 50 range or a 60 range. You're gonna have just a few bars right here, All right, if we bump it to that 50 or 60 range, you're gonna have just a few bars and you'll be able to see a little more clearly. I don't have a 60 range. Okay, let me add one. Add custom interval. Maybe actually a 57 range. 57 range. Add one of those. Okay, and there, I'll click on that. So you see how it's just a couple of bars here now. So this is your leg down. So what I'd be looking for is to move up to this level right here, 43.9 roughly. Okay, so let's look at it right there. 43.9 is what it should go back up to. Now we'll go back down here to our 19 range. And that's this whole leg down right here. All right, so 50% retracement of that would be right up there. Now, it's giving you a second bite at this apple right here, which you can take if you want to. You could have taken. You could have sold the open of that bar right there. It's too late to get into now, but it should still do the same thing. And this is your pullback. It's using going to that time frame 3 times, 3x. This is your whole leg down. So what it's suggesting is that you should have a leg that looks like this. Oops, not that one, sorry. This guy. Not that one either. I guess it's this one. You should have a leg that looks like that. Overall, right now, that's what should be happening. Okay. So that's what you could, I mean, you could look for that. I would look for this swing low right here. That's, you know, plenty. With 10 contracts on, getting all the way down there, that is plenty. But as you can see, it gave 11 ticks on this bar and a little bit more on that one. I got 2 ticks out of that. It gave another entry right here at the top of this bar, it gave that. So it gave you the full 19 ticks on that bar, plus whatever it's gotten so far in this bar. And you can calculate whatever it's gotten. Look over here on the TV trades thing, right? It says it needs an update. Now, when you see that little purple circle, that means there is an update to be had. And you can go here and do check what's new. Click on that, and it's going to bring you here. You go down to the bottom, and it tells you what I did most recently. Right, and in this case right here, I added a feature to mitigate the limitation of PineScript with regard to the number of labels that can be shown all at once. So it shows a star and it gives you the same information, but I give you the same information on every single bar, okay? So what that means is right now, when we run out of labels, because PineScript only lets you put so many labels on, it doesn't give you any information after that. If you go over here and you look right here, this is called the data window. You click on that tab, click on this tab. It's called the data window, and right here you see there's some information there, but it's none of the information that you can use until you do this. All right, if you do this little upgrade right here, and you update to the latest version, you're going to see a whole bunch of stars show up here. See those little stars? Let me get rid of the colors. Get rid of the colors. And now you see all the stars that are there. They tell you where you would have had labels. All right, you would have had labels on all of those. Okay, and you can set those, the colors of those stars and stuff, you can set that, it's a setting. But look right here, sell profit ticks and buy profit ticks. That happens on every single bar now. From the open, if you're going long, it tells you how much profit was in that bar from the open. If you're going short, it tells you how much profit was in that bar from the open. Okay, sell profit ticks on this one. If you were going short, right here, it went down 8 ticks in that bar. If you were going long, it went up 11 ticks in that bar from the open. Okay, so it gives you the same information that this gives you. It actually gives you more information than this. And it gives it to you on every bar. So you could look at this one here where the label says 11. You see it's going to say 11 on one side and 8 on the other. This 19 on one side and 0 on the other. 17 on one side, 2 on the other. It just does all the math for you. All right, and I do that for every single bar. So that is a feature that is out there now if you want to play with that. But going back here like this is what it should do right here. All right, in the bigger picture, when I look at the smaller picture stuff like this and I see it pulling back, it gets up into the overbought and I'm like, okay, well, what should it do right here now that it's in the overbought? You know, when you get into these things where you get the flat spots, what should price do when it gets up there? How far back should it pull? Should it just get up there and bump down? You know, was this a 50% retracement of the leg down? Was it? Is this more than 50%? Is this 100% retracement of the pullback? Is it more than 50%? because that's when you lead into these flat spots. All right. If the retracement is less than 50% on the pullback, a lot of times that's when you're not going to get a flat spot. All right. If you get into the overbought, the oversold, and it's less than 50%, you're not going to get a flat spot. This is important stuff that I'm saying here. Those of you guys that are trying to avoid the flat spots, if it gets into the overbought and it's more than 50%, you have a higher probability of having a flat spot. Okay. Just throwing that out there. All right. So that was the Russell. We ended up with plus 11 on the Russell. Right. After being down 50, we ended up with plus 11. The ES had my number all day. All day. We got positive once on the ES in the morning session. Now I'll go all the way back to the beginning. I'll do it this way. Alt back. Oh, it's 123. Okay, well, I did have a little bit of a chance to show you what I wanted to show you. And take one trade. We got a couple of ticks on. I've gone too far. Here we go. All right. So what I just did here to get it back in view, I double left click on price. All right, so this is my very first trade on the ES, and I screwed it up. I shouldn't have taken that trade. It had already gone too far into profit, but I stopped out, minus 10 ticks. The next trade that I took, I had a break even, then a break even. Then I had a plus 16 there. That got me to plus 6. Then I didn't do anything for a little while. Then I stopped out again. So I was at minus 4. Then I had a break even and a small gain right there that got me to minus 2. Then we were getting into some chop right here, and then I screwed up again, and that got me to minus 12. And then going all the way over here, we stopped out again. That got me to minus 22. That was a valid stop out, going to minus 22. And then, wow. Dwayne, you getting all this crazy stuff going on in Telegram?
What are you getting?
This. Just 85 times this just went off, and I don't even know what this is.
Just report spam and leave. See
Okay.
what it says, report spam and leave?
Yep.
Yeah, just do that.
Okay. All right, so I was at minus 32 after that stop out right there. And I believe that was where I ended it on the ES at minus 32 on that stop out. And it just kept dinging and dinging 85 times in my headset. All right, so during the break, it looks like there were some decent trades in here during the break. If you were just doing the trades with the trend, all right, you get rid of that. And you're just looking for long trades right now. So those would be the white stars, all right, the white stars. Or no, actually not even just the white stars. Anytime it goes into the oversold like this. Now the conservative way to avoid the flat spots, the conservative way is to wait till it comes out of the oversold. All right. But remember what I just told you a minute ago on the pullback, when it gets into the oversold, is that 50% retracement or is it more? That's what you need to consider. All right. Because if it's more, then you're more likely to have a longer leg and get into a flat spot. All right. So that was it for me on the ES. It looks like there are some pretty decent trades in here. Some good chop, and chop is where you can really make some money with this. You see there's a lot of 7s in here, a lot of 4s and greater, and 7s. Not too many that weren't greater than 4, but there's only one right there that was less than 4 that didn't keep going. Yeah, there's really only one that was less than 4 that didn't keep going. I guess this one right here too. 2 that were less than 4 that didn't keep going. So it was a pretty good period there for trading ES. I didn't do well at all on the ES today. The NQ, we came around. We did stop out on the NQ a couple of times today, but we got it back. Go all the way back to the beginning. Now the NQ is what really got us on the board once we had stopped out the first 3 trades. Once we had been stopped out 3 times. Getting a plus 75 on the NQ was helpful. The first trade we got a plus 4, and then we got a plus 75 on that one. That put us at 79. We still hadn't had the goal for the day at that point, but I don't remember if it was the gold trade that we took or the ES trade that we got plus 16 on that got us up. But the next trade that we took here, we had plus 4, then plus 75, and then another plus 75 got us to 154, and then we stopped out right there, put us down to 94. Then we had a plus 75, got us up to 169. Then we had a, I didn't add in those. Oh, wait a minute. We had to stop out somewhere else. There's trades missing in here. No, I didn't add in these wins right here. But after this stop out, we had gone from 169 down to 189. And then I'm sorry, 169 down to 109. Then went from 109 to 184, so we had a plus 75. And then we had a stop out where we went from 184 down to 124. So I missed a whole bunch of things I didn't have in there. This is where we went down to 124, then went from 124 up to 199, then 199 up to 233. Then we had a break even, went from 233 to 267, and then 267 to 271. And that was where we ended up for the morning session, but I think I missed putting in that trade, that trade, that trade, and that trade. So 4 winning trades I didn't put in. But anyway.
Dennis R. sent you a question in YouTube.
Okay, what is it?
I sent you an email, but I need an invite to access the TV trades. Do I get that with a passport? Am I even a passport member?
I don't know if you're a passport member. I can check on that.
I am a passport member, question mark. Oh. So I don't know.
Okay. Well, I'll have to check on that. But I responded to your email. So read your email.
So there you go, Dennis. He responded to your email.
Yeah, you sent that in email too. And I did respond to you in email. Okay. And I don't know if your passport, I think you are. So I'll have to check that. But anyway, that was it for me on the NQ. We ended up with 271 ticks. During the break, again, if you're just taking the short trades, and if you're being aggressive taking the short trades when you're below the YBR, you're just selling every time it goes into the overbought. So that one there, if you would have sold it going into the overbought on that one, that would have stopped you out. That one there, that would have stopped you out too. I think it didn't go 20 ticks into profit. Then you would have gotten some of it back right there. You would have gotten a lot more of it back right there. You would have gotten some of it back right there. It went down about 50 ticks before it went the other direction. You would have gotten some of it back right there. There again. See, it's going like 50 ticks into profit. Well, this is a 50 range. I'm sorry. It's going like 40 ticks into profit before it pulls back. So this one right here went a full 50 ticks in profit. This one right here looks like it went about 20 ticks into profit before it pulled back up, maybe 30. So, I mean, you can see all those here. If you're below the YBR, you know, that's how much it went into profit before it pulled back. So the opportunity was there. The opportunity was definitely there for you. Wow, it's 1:30 already. Man, where did the time go? Yeah, Dennis, I'll check and see if you're a passport guy right now. Okay. I think you are, but I'm not sure. Anyway, with that, guys, I didn't get to take many trades in here because there's a lot to talk about.
He just said that he is.
Okay, I thought you were. All right, so as a passport guy, you get access to the TV Trades range trigger down here. Okay, so you should have that. All right, so let me do this. If you have not taken a free trial with us, go here to mytradingiq.com, click on the purple button right here. There's no credit card required for the trial. Once you click on that purple button, it's going to bring you to this registration page where we ask for your name, your email, your phone number. Down here at the bottom, make sure you give us your TradingView login ID. Okay, hit the register button and you'll be sent everything you need to get into the room in the morning and get your indicators indicating. Okay, that is all that we need from you to get you going every single day. All right, Dan, did I answer all your questions? Before I pass it back out to fabulous Phoenix, Arizona, in the studio area, looking south around America's largest city park. Good. All right, Dwayne, if you are ready.
Okay, recap of the
Excellent.
recap of the morning session.
Today I took 13 minutes and 8 trades to get to $2,200 with 10 contracts on. Now you're going to show me the daily chart.
Oh, way to hang in there.
Thank you.
Yep, the daily chart.
Oof.
And guys, at the beginning of the broadcast, I told you right here is the next major support, where the step line crossed red and falling, turning it into blue and climbing, and we wrote that number down, 5607/5608. That is a very, very important number, because right below that, you've got the 62% fib retracement. And we have not had, now we got a nice bounce off the 50% fib retracement as we anticipated. We bounced nicely off the 24, we bounced nicely off the 38, we bounced nicely off the 50. If we trade through this area right here, 5607.08, then we're going to be at the 62, and I can't recall the last time there was a 62% fib retracement on the daily chart. So, and for those of you that were not tuned in at the beginning of the broadcast, so far this week, Logic 247, we've had 9 alerts, still waiting on the outcome of 1. When Valerie did the recap, it may have resolved itself. And so far, we had 8 actionable alerts, and so far nothing has stopped out.
Nice.
Unless that one waiting is still out there.
So yeah, I would think
Dan said
probably
yes,
gonna get a
I think
bounce.
so. Okay.
I'll get a bounce down here at this 5600 level, I would think. Somewhere around there.
Yep, watch this area, guys. It should be a bounce, but it may be nothing more than a bounce back to the 50 or the underside of this trend line, and then a continuation down.
If you crunch it up a little bit more,
yep,
so you can see a little bit further left. Yeah, that's kind of what I was thinking.
The low, we're going back to August 5th of 2024 to the high, the all-time historic high, which was put in on December 6th.
So picture this the way it is right now. We have a couple of things going on that are actionable, kind of, almost right now. We have an inverted head and shoulder pattern within a bigger head and shoulder pattern. You see that? Currently, we're in an inverted head and shoulder pattern. We're putting in the head right now. We put in one shoulder already, inverted. And at the same time, we are putting in the head from a bigger head and shoulder pattern, normal head and shoulder pattern, not inverted. Do you see it? It's a pattern within a pattern.
Yeah, and keep in mind, guys, that on Friday, we had a red candle all the way down through the 50. We came all the way down through the 50 on Friday, and yet we still ended up closing the day with a little green body on that candle. So, I mean, that was, one heck of a rally, but that's what you expect when you hit a 50% fib on the daily chart. So, that can happen today. Got to embrace all possibilities, but I certainly wouldn't bank on it. Okay? And just when you think the market can't go any lower, it can. Always remember. And when you think it can't go any higher, just remember, it can. So, okay. All right, Michael. Just wanted to kind of bring you up to speed on those.
All right. And, excellent. That's interesting stuff. The position the market's in right now. Yep. I would think it's going to bounce from here pretty soon. Not right now, but pretty soon. I would think. The rest of the week should be pretty
Wall
bullish.
Street's losing confidence because Trump has been able to turn around 4 years of disaster management
in 30 days.
In 30 days.
Yeah.
What's the barometer they typically use with a new president? 100 days. What happened in the first
100
days? We're only a third of the way there. So,
yeah.
Anyway, all right. Guys, we'll finish up where we left off. I think we were on gold. And Michael, I'll see you when I see you. All right, guys, we opened right here last night. Nope. See, we're on the 130. Yep. Okay. So, opening candle last night. 10 minutes into the first candle, we had the targets. The targets were published at 6:10 p.m. Eastern last night, and we ran right up to the long target. See right here where the step line crossed red and falling. Boom. Now, that's a pretty nice move. If you can get in till here, let's say you didn't get into this candle. This opened at 29.23, and that's a $300 per contract move up to the target. Of course, you could have been in sooner. You could have got in 29.21, 500 bucks. Anyway, we hit the target resistance, which sent us looking for support. And the support came at the weekly trading zone published a week ago today. Okay, so we consolidated for a few hours and then we reached down and hit the short target. Support sends us back to resistance. This is resistance times 2, the weekly zone and red and falling. That resistance sent us back to support at the target. Now, this support, okay, lines right up with these lows from Friday afternoon. See that? So buyers came in and they were really serious about trying to drive it up. But you see right here where the black step line crossed blue and climbing? That is that high. Right there. It's right there. Okay? And then it's over here again. Important prices, important areas are almost always tested. So now we come through the short target. This is off the London Open. This is the London Open, and then it tried to go higher. Okay, right into that pocket, and then bang, took us all the way down. These lows here took out Friday's lows, we've taken out Thursday's lows, and we're headed for the lowest weekly zone from last week. Price always moves in legs. Leg, retracement, leg, retracement, leg, retracement. See how the pullback held? Leg, retracement. Now, this candle, it spiked, but it's still touching the BBC. And right at the short target, that's where we got resistance. That set us down through blue and climbing, and we're almost down to the lowest weekly zone from last week. I do believe, let's see. Nope. No, not at all. In fact, highest weekly zone was way up there. So we have quite a few more zones down below. But as you can see, we're approaching this, and today's Monday, so first day of the week, previous week zones usually work just fine. Okay. Remember, when you drop to a zone, you're looking for support. When you rally up to a zone, you're looking for resistance. As we drop to this zone, 91/92, be looking for support. And last but not least, silver. Okay, this was the opening candle last night. Nope. This was the opening candle. Got blue and climbing. Took us all the way up to the weekly trading zone. But we never managed to close above the zone. In order to get to the long target, we would have had to close above. Now this high failed to take out this high, which is that long target, so that's a sign of weakness. So that sends us down. Okay. This low, pretty much the low of the opening candle. And we go back to the zone, resistance, resistance, resistance. Then we get below the BBC and we go sweeping down through the short target. Then we bounce right back up to it and it becomes resistance. Remember, coming down, you're thinking support. Now it closed, it spiked it, but it closed right on top of it. Then it becomes resistance. Price comes down. So you get a leg, get a retracement, you get another leg. And I believe that was the lowest weekly zone last week. No. Huh. That was the second to the highest weekly zone last week. So there we go. That's all the markets. That's all she wrote, as they say down south. So if we call that 5607.08, and our low so far 56.18. So could the market drop another 10 points? Yeah, certainly could. Will it? Guess you gotta wait and see. Okay. But again, remember, you had a huge red candle all the way down on Friday. But by the close of the session, same thing on Wednesday, you had a huge red candle all the way down to this trend line. But by the end of the session, you had that little green body. I am not predicting a little green body today. It could happen. Just not predicting it. Just observing it. That's all. Okay. Very good. All right. To become a member, go to or send an email to support@cfrn.net. In the subject line, put "I want to become a member." Body of the email, put your name, your phone number. We have no plans to call you, but we will email you all the information you need to make a well-informed decision as to whether or not you want to become a passport holder. And there's a link in the email that you can click to seal the deal. You're going to get 2 hours of live training in an interactive environment every trading day. That's something 9 out of 10 new traders don't have, and it's why they fail. No matter what career path you choose, you need somebody to teach you how to do the job. Yet, because of all the videos and all the books and all the websites and all the emails, and read tomorrow's headlines today for $99. That's why 9 out of 10 new traders fail. So we plugged that big gaping hole in the market by providing a teacher 2 hours every trading day. Along with 2 hours of group interactive training every day, you have access to private one-on-one mentoring at no extra charge. The strategy you learn, the indicators you own as a passport holder are fluid across all markets, all time frames. The Logic 247 alerts you receive around the clock as opportunity presents. The concierge trade alerts, you get those each evening the second they're posted. Monday mornings, except for holidays and today the rare occasion, not 15 years. Monday, 6:15 a.m. Eastern, weekly trading zones. Whether they come out on Monday or Tuesday because of a Monday holiday or whatever the reason that they would come out on a Tuesday. This is the first time it's happened when it wasn't a holiday, but I already explained that. They're carved in stone for the entire week. Okay? They don't change in any way whatsoever. And the zones you were just looking at were the zones that were published last Monday at 6:15 a.m. Eastern. And as you can see, important prices, important areas, they're almost always tested. We had the zones from a week ago today, still doing their job today. You also, as a passport holder, are invited to attend the members only workshop every Thursday night at 8 p.m. Eastern. It really is everything a trader needs, all under one roof, one low price. Learn more at mytradingiq.com. Okay, let's wrap this day up with our good word for the day. Friday's topic was God ideas. Today, prepare yourself. 2 Kings 3:16. Make this valley full of ditches. All things don't come to those who wait, but to those who prepare. There's a great illustration of this in 2 Kings 3. As part of God's strategy for defeating the Moabites, God told the Israelites to dig a ditch, and he would fill it with water until it became a mighty river. They did, and as a result, they experienced a spectacular victory. But don't miss the point here. God said, when you have dug a ditch, then I will fill it. That's 2 Kings 3:17. God can use anybody, but he doesn't. He uses prepared people. Moses lived to be 120 years old. His first 40 years were spent in a palace. His second 40 years were spent in a wilderness. And his last 40 years were spent fulfilling his God-given assignment. That's 2/3 of his life in preparation. What happens when you're not prepared? Things you hope won't happen do. Often the dividing line between winning and losing is preparation. Singing "When You Wish Upon a Star" won't make your dreams come true. You have to prepare yourself. Paul's ministry begins with the words, "Lord, what do you want me to do?" Acts 9:6. Whereupon God takes him into the desert for the next 3 years to teach him and prepare him for his ministry. Whether your vocation is sacred or secular, you have to know what it will cost in terms of time, effort, and resources, and prepare for it. Proverbs 24:3 teaches us, "Through wisdom a house is built, and by understanding it is established." So the word for today is prepare yourself. Thanks so much for tuning in. Whoever you are, wherever you are, may God continue to richly bless you with his mercy and with his grace. And I'll see you at the bell.
Remember this, there is no greater return on investment than to see a human life changed and given hope. As always, pray hard and trade safe. Any financial information discussed on this show is simply the opinion of our host, Dwayne Reeves, his co-hosts, and guests. To learn more about trading E-mini futures or to take a 1-week free trial in our live trading room, call 1-866-928-3310. 866-928-3310. Information discussed on this radio program should not be construed as a recommendation to buy or sell any security. Always do your own due diligence and consult with a licensed securities broker or financial planner before making any investment decision.